Welcome back. Netcare has delivered growth in its top and bottom line, and the half-year period. The private hospital group reported a 4.3% rise in revenue and 5.8% increase in adjusted headline earnings per share. Despite this, paid patient days declined 0.8%. The groups pointed to sector seasonality, lower respiratory admissions, and a reduction in maternity cases. We're now joined by the company's CEO, Richard Friedland. Thank you so much for your time, Richard. Now, when we talk about sector seasonality, of course, one of the things that did influence the numbers in this interim period, what exactly are we talking about, and how does it filter through to the financials?
Yeah, thank you very much, Zanati. The major impact from a seasonal perspective was that Easter fell in the month of March, which is the last month of our first half of our financial reporting, whereas in previous years it fell in April, and school holidays also occurred in March. We also had the people coming back from holiday 1 week later. So that's the kind of seasonality that has impacted our numbers, and that is not insignificant. And so in our results, we actually showed you the 7-month result, including April, where there's been a very significant recovery in volumes. And we've seen that recovery in volumes certainly to date in the month of May, which augurs well.
All right. I hear you on that. And thank you so much for clearing that up for us as well. I mean, just looking at the level of growth that you did see in this period, how would you describe that, considering also the economic environment, the current economic environment that you are operating under?
Well, I think you're asking excellent questions, Anati. I mean, we've been under pressure from a volume perspective. There's no question about it. But the standout feature is that because of our digitization strategy, and we're 6 years into a 10-year strategy to transform the way we deliver health and care, we've been able to demonstrate very significant efficiencies, notwithstanding lower volumes. And we've been able to show very good operating leverage. So whilst revenue might have only increased by 4.3%, we were able to increase EBITDA and operating profit to almost double that amount.
Yeah, all right. Yeah, it's really quite interesting because, I mean, you described that, the results you got from the muscle that you built operationally, of course, that being driven by the digital effort, and of course, that managing to shrug off the current economic challenges that we are experiencing in the country right now. What priorities are you pinning your efforts on in building momentum then in that, operational muscle as you do go through this digital effort?
Well, I think, Zanati, our digital platform that we've now built and completed by the 28th of April comes with enormous advantages for us. Firstly, from an efficiency point, operational efficiency, we'll continue to see a growth in operational efficiencies coming through over the coming years. And digitization is a gift that continues to give. So that's an area we've met on the tin every year. We've forecasted certain efficiencies, and we've certainly achieved that. But most importantly, we're now focusing on something we call clinical efficiency. How do we improve patient outcomes and clinical pathways? And how do we reduce the overall cost per event of a patient coming into our hospital? And that's an enormous focus for us. And then the third pillar of our strategy to transform healthcare and the way we deliver it is person-centered healthcare. How do we now focus on giving people their results, making sure that our patients understand what happened to me, whether I was treated in Netcare 911, or in our mental health facilities at KESO, or in our cancer facilities, and being able to have that record on their mobile phones that empowers them and encourages them to participate in their healthcare. And hopefully with that record avoids the duplication of tests when people say, I can't remember what happened to me.
Yeah, well, I do note the efforts that you are embarking on to improve your financials and to build momentum there when it comes to, the patient experience and also what you get out of, each visit. But also we need to look at shareholders and also what they're getting out. In terms of shareholder returns, I mean, would you say that your share price is not really reflecting the value of Netcare and that there is a need to unlock value through share buybacks?
Well, very, very much so. What are shareholders getting out of us? If you look at the last 7 to 8 months, the answer is 1.2 billion rands in a combination of share buybacks and of dividends. So, we have very good cash flows within the organization. We convert cash, our cash conversion ratio is at least 90 to 100%. And we'll certainly be using excess cash to buy back shares at these very low levels, or where we see value or that the share price itself is undervalued. So certainly at the moment, we have been buying back shares. I can't say that that will continue. It will depend on the share price itself. But it's certainly not a liquidity issue for us because we're extremely cash generative.
All right. Well, one of the things that has had an influence, I would guess, on your share price is the national health insurance that was signed into law last week. Is there any panic, Richard, in the hospital corridors or boardrooms about the current form of the NHI?
There's no panic whatsoever. Since our inception as Netcare, we've always stated and recognized there is this very significant inequity in the delivery and access to healthcare for all South Africans. And we fully embrace the concept and the philosophy of universal healthcare. The big question is, how do we achieve it? And, over decades now, over several years, there have been many stakeholders, be it academics, be it professional bodies, be it ourselves, business organizations, that have given very constructive and extensive input into what universal healthcare should look at. Unfortunately, most of that has been largely ignored. And we think that's a missed opportunity because there are some fundamental flaws here. And we have no doubt that many people will seek to challenge this legally. And I think the unfortunate aspect is it's going to further delay the implementation of something that's critical for us all in building a sustainable society in South Africa.
Of course, so we will be keeping a close eye on that and its impact. Thank you so much for your time and just
so much.
detailing those numbers for us, Richard. That was Netcare CEO Richard Friedland.